Good morning, friends. Welcome to Adda 24/7. We are in Achievers MCQ series for BFM, and today's topic is monetary policy. See, our monetary policy is an important policy of RBI which affects your BFM studies also. Why? Why BFM studies are affected? Because BFM, this monetary will include what? Short-term inflation, right? They'll always try to target short-term inflation, and inflation is related to bonds. And that is the main topic of your studies in BFM. Okay, so follow this video till the end. Also download Adda 24/7 app on your mobile. In this app you will be getting all the premium study materials, current affairs, job alerts, daily quizzes, live classes, ebooks plus tests. So you will be getting everything over here. Download it immediately. Also subscribe to Officers Adda 24/7 YouTube channel. In this channel you will be getting all the updates on JAIIB, CAIIB and various banking exams. Also you'll be getting free YouTube series on various topics of JAIIB and CAIIB. So grab it immediately. Okay, this is the new batch, just now started from January 23rd. All the 4 subjects, ABM, BFM, ABFM and BRBL, all the 4 are covered. Okay, 80% off is going on presently, so grab it immediately. More on this later. Now, what is monetary policy? Monetary policy is the process by which government, central bank or monetary authority of the country controls the supply of money, availability of money and cost of money or rate of interest. Now, before going ahead, let me discuss this part. Government, central bank or monetary authority. Why these 3 words are given? Remember, in each country, it's separate. Okay, so in India it's not here, it'll never be all the 3 together. It'll be either this or this or this. So in India it is central bank. In some countries which are smaller as such, they won't have all the central bank. Their government will be controlling everything because it depends on the country's level. Okay, India is one of the biggest countries now, so that's why we have the separate positions and separate work culture for central bank, government and monetary authorities. Okay, yeah, so the process by which, let's say only central bank in India, central bank controls the supply of money, availability of money, cost of money or rate of interest in order to attain the set of objectives oriented towards growth and stability of the economy. Always remember, the main job of monetary policy is main job. Okay, I'll just write monet. Okay, monet policy, main job of this is only 2. One is inflation control, inflation, main, very important, inflation control. Okay, and second one is growth. Okay, means it shouldn't happen that RBI is only controlling inflation and growth is hampered, or it shouldn't happen that RBI is only looking at the maximum growth and inflation is going to the skyrocketing. Okay, so that is also not okay. So these are the 2 main jobs of RBI under this monetary policy. Okay, so supply of money means what? Supply of money will lead to inflation. More the supply of money, more will be the inflation. Less the supply of money, less will be the inflation. Always remember. Okay, so monetary theory provides insights into how to craft optimal monetary policy. Okay, what do you mean by optimal? Optimal means inflation shouldn't be too high, growth shouldn't be too high, both should be balanced. Okay, that is known as optimal. Expansionary or contractionary policy. Now what is expansionary and what is contractionary? Here, when an expansionary policy expansionary policy increases the total supply of money in the economy, a contractionary policy decreases the total supply of money in the market. Means what? What do you mean by this expansionary, contractionary? Okay, let me see if we are having this in the slide, or I'll explain you separately. Expansionary policy is traditionally used to combat unemployment in the recession by lowering interest rates, whereas contractionary policy involves raising of interest rates in order to combat inflation. Okay, monetary policy is contrasted with fiscal policy, which refers to government borrowing, spending and taxation. Now before going to this monetary policy, this fiscal policy part, let me explain you this expansionary and contractionary. Understand, say this, suppose if I am RBI, where will I write? Let me write it over here. If I am RBI, okay, now how will I lend the banks? Suppose if I want to give money to the banks, how will I give money to the banks? Mainly, see here, there are many tools. Okay, main tool is for giving money is repo, right? Through repo transactions, I can give money to the bank. Okay. Now tell me one simple logic. If I reduce the repo rate, let's say repo rate is now 4%. Now if I reduce it to 2%, what will happen? So this is what I am charging from the banks. I'll give you 1 lakh rupees and I'll charge you 4% interest. So if I reduce my interest rate, what will happen? Bank will say, okay, now I am getting this money at a lower rate. So bank will buy more money from me. Okay. So if I reduce it, then bank will buy more money. What will bank do with this money? If bank has more money, it will lend it further. Further lend to the customer. Okay. Now what will happen because of this? If now more lending will be done, right? Because bank is getting at a lower rate of interest. So bank will lend more. So what will happen now? This customer will get more money now. See here, everything is more. Customer will get more money now. Because of this, what will happen? Once the customer gets more money, he'll start spending more. Spending will be high. Spending. Okay. So once this spending is high, what happens? This gives rise to inflation. This is an important part. Okay. So that's how it affects. If RBI reduces the repo rates, it leads to more inflation. Of course, along with inflation, it leads to growth. Always remember one important part. Inflation and growth, they always go hand in hand. Inflation more, growth will be more. Growth less, inflation will be less. So that's why RBI doesn't want inflation to be huge and growth also to be used. Growth and inflation should go moderately and go hand in hand. Okay, got it? Now let's come to this fiscal part. Monetary policy is contrasted by the fiscal policy, which refers to government borrowing and spending. See here, always remember one important part. RBI has no existence within itself. No existence, okay? No existence within itself. Why does RBI exist? RBI exists for support government, okay? Why is government there? What is the rule of government? Why does government exist? Government exists for the betterment of the people, right? So if government is for the betterment of the people, RBI should definitely support government. So that's why if RBI is supporting government, this RBI's policy is what? Monetary policy. RBI has monetary policy in its hand. So monetary will always support government's fiscal. Government will always have fiscal policy in their hand. Okay. So monetary will always support fiscal. Okay. Yeah. What is fiscal relating to? It is relating to government's income and government's expenditure. Government's income via taxation, borrowing, sale of assets, everything. Okay. Got it? Now, before going to the question answer session, let me come back to the batch. See this. All the 4 topics are covered in the batch. All the numericals, case studies, question banks, then typically required big case studies, everything is covered over here in the batches. Okay, so that's why join these batches ASAP. Right now, look at this. This Republic Day sale is still going on at 80%. So go for it immediately. Check it on the website, on your app. In the app, you'll be getting 1% extra. Okay, due to the coins. Use the code Y432. Never forget this code Y432. That will give you huge discounts. Okay. Those who have not liked the video up till now, kindly like it fast. Also click on the bell icon. Everyone, please do it. Okay. Now let me ask the question. Bank rate refers to what? The choices are discount rate, subsidy rate, marginal rate, none of the above. What is bank rate? Discount, subsidy, marginal. What is this marginal? Okay. First give me the answer, then I'll give you the logic behind this. The answer is discount rate. What is discount rate? It is a benchmark rate. RBI lends here. RBI will lend to the banks, okay, to the banks at 2-3 rates. One is repo, second is bank rate, okay, and also there is a third part, call. Okay, call means short money, very short money, overnight only. So it can lend through these 3. But what is bank rate? Always remember, this repo rate will be lowest. Logic I'll tell you, lowest. Why? Because under repo, banks give security to RBI. So this is like the collateral loan, right? Collateral. collateral loan, right? Then second is this bank rate. Bank rate is slight higher, slight more. Okay, why? Because here no collateral is given, no collateral. It's a unsecured loan. So call will be the highest. Okay, among the three, highest among the three. Why? Because this is a very short-term funding which is done. So these two are unsecured loans, unsecured. So that's why these two will always be higher than the repo. Okay, got it? So this bank rate is basically discount rate. Discount rate means what? Benchmarks. Here all the three are considered as benchmarks for various types of lendings. Got it? Expand OMO. What is OMO? Open market operations, open market organization, open monetary operations. What do you think is the answer? Type fast. 1, 2, 3 or 4. Everyone. Yeah. It is. Got it? It is open market. OMO. Right? RBI lends here. What is OMO? RBI. It is a normal transaction done by RBI with the banks. Okay. So under OMO, RBI lends money. Number one. Also takes money. Okay. Lends and takes. Both are allowed. Takes money. So both are allowed under OMO. Okay. There is separate part that's called as MSF, marginal standing. Okay. There only RBI lends money. There are no taking back. Okay. That's the lending part. But that's for separate unseen situations. MSF is not there every time. OMO happens every time. Okay. So open market operations. Got it? Where RBI buys and lends and takes money both. So whenever RBI does OMO, RBI will share. When RBI will give money to the banks, it will take bonds from RBI, from the bank, right? So government bonds. And whenever RBI takes money from them, it will sell bonds to the bank. So it's after all, see this give and take relationship. Okay. What is meant by monetary policy? What is this monetary policy? The topic itself is monetary. So what have you studied up till now? The process by which Parliament controls the money supply, process by which central bank or monetary authority of a country controls the supply of money, and process by which international market controls the money supply. So is it international market? In India, what is the case? D is none of the above. So forget this. D is out. Okay. So what is this? A, B or C? Which is the main authority in India which will try to control the money supply? Parliament, central bank or international market? Answer is B, right? In India it is central bank, always remember. But in other countries it can be parliament, it can be the president, it can be anything depending on what is the structure of that country. Okay. What is the difference between real interest rate and nominal rate? Now what is this real and inflation? Let's see. Nominal. Real interest rate takes into account inflation. Nominal interest rates are those which apply only to borrowers and not lenders. Only two, both 1 and 2 and none of the above. So what is this? Let me give these answers over here. A, B, C and D. Okay. Now give me the options. Real interest rates take into account inflation, means they take inflation into account. Real interest rates. So you have studied this in one of the topics on ABM also. Yeah, inflation. Okay. Remember, real interest rates take into account inflation because always I'll give you two parts over here. See here, real and nominal. Real means and nominal. Okay. Real means with respect to base year. Real is always with respect to base year is considered. Base year. Considered. I'll write it over here. Considered. Whereas in nominal, base year not considered. Not considered. Always remember this. Okay. So that is the difference between real and nominal. So point number 1 is okay. Real interest rate takes into account inflation. Inflation means what? Inflation will. What do you mean by inflation? A rise of rates with respect to a base year. That's inflation. So 1 is correct. What about 2? Nominal rates are those which apply only to borrowers and not lenders. Is it true? Means nominal rates apply only to borrowers. and nominal rates don't apply to lenders. Is it the case? See here, the point over here is nominal rates will apply to both borrowers as well as lenders, both of them, okay, depending on what is the size. So the correct answer is only 1 over here, okay. One for your homework. When foreign currency is fixed and the value of the home currency is variable, it is called as what? Means what? If it is $1 equals to rupees 80, see this, foreign currency is dollar and rupees 80 over here. So 1 rupee, this rupee is my local currency. So if this is fluctuating and remember left side is always fixed, okay. So this is fixed and rupee is fluctuating, so it's called as what? Direct rate, indirect rate, cross rate, variable rate. What is the answer? What do you think should be the answer? Try it all yourself, okay. Now let me show you how to get the discount using the code Y432. 80% off is going on right now, okay. So go for it immediately, I would say, because this sale won't last long, okay. Go to Adda 24/7. In Adda 24/7, go to the opening page, front page, click on JAIIB and CAIIB, click on CAIIB 23, okay. Once you click on CAIIB 23, you'll see the batches. Click on the January 23rd batch, English batch. You'll see the details over here. All the details means what are the timings of the batch, what are the dates of the batch, then what is the study plan. Everything is given over here. Okay, you can go through it. I'll cover the important part, that is recorded videos are available 24/7. Means if you miss out on any class, you can get the recorded videos again. Okay. Also, two-way interactive classes are available. Two-way interactive means what? You can ask the question there and then itself. E-books are available. Okay, these are the important highlights. Okay, now let me come to the fees part. 23,999. Okay, let me click on this view offers. Once you click on this view offers, put the code Y432. Click on apply. Look at this fees. 23,999 reduces to 4,799. 80% off. Such a huge discount you are getting. Instead of going for a single batch, I would say you should go for a Mahapack. What is Mahapack? In Mahapack, you will be getting all the batches. All means how many? See here. If you check Mahapack, JAIIB, CAIIB, Mahapack. Click on the JAIIB, CAIIB, Mahapack on the front page itself. Click on JAIIB, CAIIB, Mahapack. Now click on CAIIB ka Mahapack. Okay. Click on this. Now you'll see the details again. Details means what? How many batches are available? 15 plus batches are available for CAIIB under single fees. Case study batches are separate. Exam focused numericals. Importantly, again recorded videos are available. Okay, you can ask the questions in any batch. Okay, all the questions. Now let me come to the fees. 35,996. Click on view offers. Put the code Y432. Y432. Click on apply. Now look at this. Validity becomes 12 months. And what is the fees? 35,996 reduces to 7,199. 7,199 for 12 months means amount comes roughly to 600 per month. This is an investment for lifetime. Okay, 600 we spend it on a normal pizza every month, isn't it? So go for this immediately. Why am I stressing on the batches? No, because look at this. The portion of CAIIB has changed. Okay, many of us don't know the new portion also right now, isn't it? So under the new portion we have ABM, BFM, ABFM, new subject, and BRBL. So banking regulations and business laws. Also electives are rural, HR, IT, central banking and risk. There is no retail elective. Subjective questions are there. Negative marking has been removed. That's a good sign for you. Okay. So I'll stop over here. Tomorrow I'll be back with another session. Till then.